Hi everyone, Stuart here again, and welcome to another end to another crazy week. I don't know what to say. We've been all over the place. Obviously, main news this morning is obviously we ramped up yesterday from US to China to 145. The Chinese this morning have reciprocated, and we're back to 125 from 85%, so 125% on tariffs on imported goods. Remember, it's only goods at the moment into the US. Interesting, it's just been the Deputy Treasury Secretary. I've forgotten his name off the top of my head. It's just been on with Bloomberg talking about, first time I've heard the administration talk about in a public interview about, the last time when they were talking about intellectual property rights, non-tariff goods or services, as well as part of the imbalance in this massive trade imbalance between the US and China. Obviously, the demand in America is driving the export of Chinese goods to America, as well as services. So again, talking about financial services, US financial services access to the Chinese market, and the hostility of the rhetoric. There was a well-regarded academic, Chinese academic, on the news in the UK. I'll see if I can find a video for you if you're interested. Being very, China won't back down. China is a 5,000-year-old, has a 5,000-year history. We'll be here for a long time. We'll be here for another 5,000 years. We've been around a lot longer than the United States of America. Empires wane and fall, blah 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 blah. All of that spin yesterday it's very, very forceful, and China won't back down. And then we saw this morning this ramping up again, or this morning European time, is ramping up again of the rhetoric from China and the actual action on the goods imports. So goods stuck at ports, goods waiting to be exported, waiting to be imported, all of those are now starting to get impacted. It's live. Again, the White House, it's still early morning, relative early morning in the United States. There's nothing new out of Washington from the immediate cabinet team or the president, excuse me, as far as I've seen. But as far as the market is concerned, the sentiment remains pretty poor as far as the outlook for the dollar is concerned, and general riskier assets. So stock markets were down again yesterday very significantly, 4.3%. Although on the Nasdaq, although we were much lower than that, we were down 7.5% at one point. The S&P closed down 3.5% off 181 points at 5268. Cash market closed yesterday. We had that softer reading for CPI, and then this morning, or not this morning, just an hour or so ago, we had the PPI reading. Remember, the PPI is Producer Price Index reading, also cooler. PPI tends to feed into CPI, so this suggests there might be some softening. However, unlike yesterday, the previous month reading was actually ramped up. So from 3.4%, it went up to 3.5% last month, although this month it was cooler than expected at 3.3% the headline, but the core also turned negative, like we saw with the core on the CPI data yesterday. But again, you can see the three readings for the previous month was actually ticked higher, so that will feed through in the revisions for next month. So the tariff impact is potentially starting to build up and feed through as well. Although the cabinet meeting yesterday, President Trump pulled a surprise sort of cabinet meeting yesterday, and he was obviously used the CPI data we saw yesterday. This lot up here, sorry, that was UK data. It was better than expected this morning. It's Friday still, wasn't it? So much stuff in here. There we are. The CPI data yesterday being weaker than expected. The core down at 2.4% from 2.8, and the headline 2.8 from 3.1. Saying there's no inflation in the market. Reading this 1.1% for March. So yeah, I think it's the calm before the storm. The other key data we had this morning, I just touched on, much better than expected GDP reading for the UK, 0.5 of 1%, ahead of expectations of only a miserable 0.1 of 1%. Rise year on year, 1.4% compared to 0.9 of 1%. Previous months also were upgraded. The caveat on the UK data here and the industrial production data was much better than expected. So you can see the manufacturing production here at 2.2%. Is a lot of this could have been, or probably was, front running the impending sort of tax hikes on businesses that were coming in April. So it's very good news for the UK government. First significant piece of positive economic data for the UK. In a while. So if this is just, however, obviously it's the first, and so therefore it could be an outlier. But reading across the board, most of the readings you can see here were better than the previous months, were upgraded from last time. So although some of these are absolute dire numbers, they're a lot better, or they're better than they were. They've been upgraded, and the actual data this month was better than expected as well. So overall, it's a positive data morning for the UK. German CPI in line with expectations this morning. Spanish CPI also in line. Italian depends. I don't read all this data through, but yeah, the main data today, as far as the US market is concerned, that weaker than expected PPI data. The reason I've delayed today's webinar is for this this announcement that's coming in about 10 minutes time. The University of Michigan. Or the Michigan sentiment numbers. Now these are expectations, so these are obviously, it's not hard data, but the key thing is, as you can see here on the calendar, these are P. So P for preliminary. P for preliminary. I can't pronounce that this morning. P for preliminary numbers. So it's the first reading of these. So see how big a hit these get. If they don't get a hit, if they're actually hotter than expected, that again will be grabbed by the White House as a positivity. However, it's likely that these could slip quite significantly. These consumer expectations, inflation expectations, both in 1 year out, 5 years out, and the current conditions, how people are feeling at the moment, and then how people are feeling further out into the future. So these numbers could be actually quite key to us. So we're really interested in those coming up in, I say, 7 minutes time. So if we had a quick look at the charts, let me just get rid of or reduce the size of my head. There we are. You know, I'm staring at my bald patch, do you? There we are. So this happens to be the dollar CAD. It's the last one I had up. We were shorting this last night, didn't we, on our Discord group? There's our there's the positions we took last night. I posted this last night. Dollar CAD was already open. We'd lowered the stop loss last night to 40.20. We've moved it right down again this morning. So half of that is already closed. It was our only winning trade yesterday after I got hit quite badly yesterday. But all of these overnight have hit target one. We were short dollar yen, or still are short dollar yen. We're long euro pound. We're long Kiwi dollar, and we're long Kiwi CAD and short pound Kiwi. But the main crosses, the short yen, long euro, long Kiwi are all very much in the money as the dollar's weakened today. And you see this in the Canadian dollar. So our stop loss now, if you've been following me or don't, I mean, it's up to you what you do, isn't it? It's your money, guys. The stop loss now is down at 139.10. I think it's 139.10. I think it pulled down to. These are the 4-hour candles. So we were short from the daily time frame here on the 9th, close of business on the 9th. We actually got filled here at whatever that price was. I don't know whatever price is. I've just copied this across from my trading platform. But target one was there. Kept it yesterday, and it's still, I say, very much in the money. Approaching oversold here on the RSI, but you know, MACD, the histogram getting bigger, if anything, and the move down on the K and the D line also getting bigger. So Kiwi over 58, so big old push up this morning. Again, I haven't got all the lines on here, but that's very much in the money. And the euro 113. 33, 113.34. This morning we went through 114, and we went as high as 114.65. So just quickly before the data comes out, if we look at this on a monthly basis, the euro, unfortunately this trade locker platform only goes back to October 23, but a massive massive month of the last 2 months, massive weakening, strengthening of the euro and weakening of the dollar combining to have a huge move. The weekly candle, just as impressive this week as well, a huge, big, thick bodied candle. That's very positive through the key resistance at 112. We're clearly going to hold that into the close of the week. So some significant positioning, some significant rebalancing of positions potentially over the weekend, or some analysis done on the close of the weekly candle. But you can see massive move up. The caveat is that we're into overbought zone on the weekly candle. That will raise some significance with some systems. You can see here the last time we were up there, we did come down, but then rallied again to the 112 area before it fell quite significantly here. But this is back. Sort of this is, when was that? That was August. It's a weekly candle. I think it was monthly now. So August we were back up here, and then dipped, but then dipped quite significantly into the end of the year, into the election, before turning around. So yeah, huge week, and you saw here we had a consolidation for 3 or 4 weeks afterwards. This was the March, beginning of March. This is our first week of April, similar pattern. So perhaps we can see some consolidation. As you can see here, the resistance then was 108, and we consolidated above that for 4 weeks before we took off again. Have we got overstretched? Are we going to consolidate above 112 next week? But that's stories for next week. So let's see how we go. But as far as our daily trade is concerned, we're nicely long on the euro against the dollar from again from down here on the 9th. So very much in the money on that trade to the upside. Kiwi we just had a look at as well, and the CAD earlier. So we'll come back to the others in a minute when we look at everything else. Crypto, good day yesterday, not so great day today. Bitcoin 82.70, 72. Sorry. Good day on good day on Wednesday. Not so good day yesterday. It was down with everything else, but bouncing back today. But yet again, as we said a few times this week, we've got to break this 83 barrier if we're going to attract more technical buyers to Bitcoin at the moment. So last time it was quite positive, but then we drifted back. Last time it was less positive. It was only for 1 day, and then it was a big sort of doji type candle. And then down, and then down here to this testing of 75. We tested 75 again on Wednesday. So we were up, up Wednesday, having tested 75. So clearly buyers down at 75 and the 78 zone on Bitcoin. Down yesterday, didn't get into the 78 zone, but we're back up today at 82,700. So we need to break significantly the 83 and the 20-day moving average, and more significantly, if we are going to move higher for Bitcoin, we need to break currently 85,100, which is where the 50 days sits. So at the moment, the bias, although we're up for the day, the bias remains to the downside for Colin Crypto or Billy Bitcoin. And Colin Crypto generally. And interestingly, Retheme I noticed was doing the exact opposite to what Bitcoin was doing earlier. If we look at the hourly chart, we've hang on, no, I must have looked at it wrong. I must have caught it here this morning. Oh, it was yesterday, wasn't it? It is actually going up in line with Bitcoin. I was looking at a different. I must have been looking at a different chart. So just ignore me. I don't really follow the cryptos that much, to be honest. So yeah. But anyway, that's a downtrend, my friends. That's a classic downtrend. I don't fight that one. Energies, oil, UK oil, Brent, 63.50. US oil, the key US oil, West Texas Intermediary, back to $60 handle. So another strong day on Wednesday as stocks rallied. Down day yesterday again as stocks declined again as well. So outlook remains dim or pressured. The 20-day now at 65.45. So very much downtrend in stink. That 55. I thought I'd put a little horizontal ray down here at 55 the other day. That was our intraday low. I need to measure that because we could quite easily come back to test that as it's a price. The price stopped going lower. Obviously, that's probably more significant there at $58. Let's put a full line in there at 58 because that's where the days finished. 58.10 or 58. Call it 58 just for round number sake. Or we come back to have a look at this in the future. It may or may not be tested. They tend to be. So there we didn't actually, interesting, 58 was below that, so 58, the new end of day low for the derivative oil market. And yeah, indices, finally indices, and we'll come to gold in a minute, my friends, because we've had a new all-time high for gold today, which I'm sure you are aware of. Data is out, so let's have a quick spot here on Forex Factory. So big miss for consumer sentiment. It's not a surprise, is it? Well, we're still holding over 50, but still that's a big significant decline. Last month was also rated, moved down nearly a whole full point from 57.9 to 57. It was expected to slip a little bit, but it's 3 and a bit points under expectations. Look at that inflation expectation, 6.7%. That's for the 5-year expectation. We'll come back to our calendar in a minute. It's got more detail in it. But if we just look at the graph here for consumer sentiment out of Michigan at 50.8, here we are. You can see this is not, we haven't been down here since the summer of 2022. So it's, I don't know, do the maths. It's quick maths, July to what's that? That's nearly 1, 2, 3 and a bit year low, isn't it? Or nearly 3-year low, 22 to yeah. To that stood here, but as you can see, let's just have a look at it. It's 50.8. It's the lowest since July 2022. The consumer had been holding up the US economy in the final quarter, very exuberant with obviously the stock markets and what have you. Of 2024, even the beginning as we started into 2025, the exuberance of the new president, and it slipped a tad in February, but March was dire. Big miss at 50 from expectations of 62 to 57. The miss is comparable, not as big as last month, but it's comparable in percentage terms from what was expected to the actual data, but the actual hard sentiment data, that's all this is, remember, as well. So people understandably feeling really rattled by what's been going on, particularly in the last week. So that's come in at you know, a nearly 3-year low for University of Michigan consumer sentiment. So how that's impacted actual the market, I would guess that's put more pressure on the dollar, or it might actually. Let me look at this. I say it's not a lot. It's not a significant data point as far as traders are concerned. But yeah, it's from a, you know, we've had a good day for the euro. It's cooled in the last hour or so. The dollar on the US Open. Last half hour or so on the US Open, stocks opened high. We'll come have a look at that in a minute. But it's now giving back half of that gain in the last half an hour, isn't it? You can see that, you know, that little, that's a, if you do a little that little fibge on that leg there on the on your 5-minute trade, as I'm saying, as we saw on Monday, Fibonacci works on any time frame. So we can see, if whoops. We've got our move down here. Is that the low? Well, looks like it is at the moment because we've bounced here ahead of the data. We've held it ahead of the data. So are we going to move up, or is this going to prove resistance here? So the key 50 is there. Sorry, that's 61, isn't it? So we're into 50 of this decline. We'll see. And there's that low of the day. So we see we've got buyers down here. So a break above here will take us back to test this high, and then possibly up to 114.60. 61, which is where we went to this morning in the European trades around about 10 o'clock, or we break back down here. We break this low zone here and we test the lows from this morning in the open of the European session down here at 112.50. But yeah, that will tell what breaks this particular little zone there on the 5-minute trades here. But anyway, euros dollars weakened on that immediate data point. So let's just bring in our calendar. Let me just update it because I say I'll have some more detail in here, conditions as well as the expectations as we go through. So there's our Michigan statement. So Big hike for 1 year expectations. We've just seen 6.7% from 5% last time. 4% for the 5-year outlook from 4.1% last time. And consumer expectations 47.2. Just said worse, much worse than expected. 42.6 last time. But this is the headline one. This one here. The 50.8 from 57, and the current conditions, interestingly, even worse, from 63.8 to 56.3. That's a that's nearly 6. That's also yeah, not quite. So this is the worst number, the more significant one here, the consumer sentiment, the current conditions. So 50.8. So again, weighing on. Again, as I say, they're only sentiment expectations, but this is weighing and this is adding to the sentiment data. So although the CPI and the PPI, the White House can claim is what is beneficial for their approach. The impact of their approach, this cracking up of tariffs on all friends and foes. Even the best friends are still getting 10%. Everybody's getting 10%. And the upending of global world order, basically, certainly trade order. And, the Chinese are clearly not backing down. There's no suggestion by them that they would. Nobody really thought they would. It's the tit for tat, the cranking up, but how much further can they go? They've said this is a ceiling. 125%, but the US is 145% on everything, including that existing fentanyl. Fentanyl was mentioned again this morning in that interview with the Deputy Treasury Secretary. Although the Chinese don't export fentanyl directly into the United States, what the Americans are uptight about is the chemicals that's available are produced in China, exported to countries like Mexico and other Latin American countries in particular, parts of Europe as well, and then produced, made into fentanyl, parts of Canada as well, and then transported over the border, the land borders between Canada and the US, and Mexico and the US, and that's how the fentanyl is getting into the US. Obviously, some of it obviously clearly gets into the US directly as well, and it's manufactured there as well. So cracking down on things at home is also a target of the new administration. But anyway, that's just one small part of this huge trade in goods that goes between the US and China, and the big ruckus we've got in the political status quo we had in the world since World War II. Obviously, countries like Russia, North Korea, Iran, all sitting on the sidelines at the moment, and just watching all this play out. So the Americans, the US administration, the Treasury Department still confident that they will get some deals in this 90-day stall that the president has been sort of backed into announcing yesterday. Desperate not to call it a U-turn, desperate not to call it his Liz Truss moment, although many, particularly here in the UK, the critics of Trump are calling it very much a Liz Truss moment, trying to take on the markets and getting caught out quite badly. Also, his comments about now's the time to buy, my friends, on whenever it was it Wednesday morning? On that Wednesday morning, ahead of that Wednesday rally in the stock markets, is being questioned by regulators, relatively understandably as well. Sorry, we just got the daily chart on the FTSE. Yeah, it was Wednesday, wasn't it? We had this massive rally on Wednesday. Still, again, another key line in the sand remains the 20-day moving average, as ever, as history proves for many times. In my trading career, it's held on this rally, so we are still hawkish. The stock market's 5,000 is the new line in the sand to the downside for the S&P 500, 5,300 we trade at the moment. We've bounced a wee bit this morning in the cash open. The actual cash markets are currently trading. The Nasdaq's up 68 at 16,455, and S&P's up literally 1 point at 52.69. Now you can see our derivative is trading at 52.89, so 20 points to the upside in that. And the Dow is down 39 points at 3958 at the moment. It was about 10 minutes ago when that screenshot, I've just taken a screenshot before I came on, In fact, it was 20 minutes ago, wasn't it? So it's a little bit out of date, that. But there we go. The misery continues. The volatility continues. We remain under the key 20-day moving average here on the S&P 500. The Dow here, our derivative, similar, a very exact pattern, wasn't it? Big Wednesday, gave up quite significant gains, but look at the size of that candle. We weren't down here yesterday, but we're sort of middling so far today, not going anywhere. What has happened today is the earnings season, the first quarter earnings season, which is normally a major market moving event when it starts for some particular stocks. It's got, obviously it's all getting consumed by the waiting on the tariff, more on the tariff story. Some big Wall Street banks, the 5 big Wall Street banks report today, Monday, Tuesday. JP Morgan came out with better than expected results, both above the line and below the line. Morgan Stanley were also where they were more or less in line with expectations. Morgan Stanley, their shares haven't moved at all. Wells Fargo, although beat above the line, were missed below the line. They missed sales revenues relatively significant at Wells Fargo. And BlackRock, I didn't check, and I can't remember who the other one was this morning. The Bank of New York Mellon, I also haven't checked, but certainly JP Morgan, the biggest of the big ones. If we look at the S&P, go back to the S&P 500, the biggest of the big ones hasn't. In fact, let me just tell you what we can put on. A little feed I've got here. Finviz, it's a nice little feed. You can see these are the financials here. JP Morgan better than expected, so stocks up nearly 3%. Wells Fargo missed below the line, and they're down 2.5%. And the other one this morning was BlackRock, which is just showing you that. BK, what's BK gone? BlackRock here. Sorry, that's Bank of Mellon as well. We're sort of in line, but their shares are down. And BlackRock is, where's the BlackRock gone? It's not actually there. It's under financial. Financials, isn't it? Okay, it's BlackRock. Oh, can't find them. Anyway, BlackRock was in line. So let's just move to gold, because the major beneficiary of this move and what was causing the big weakness earlier in the week and yesterday was the move in treasuries. US treasuries were being sold off, even though yesterday again, let's go back to the calendar again, the 30-year auction yesterday, the day before we were talking about the key 10-day auction, but the 30-year bond auction yesterday also came in quite sort of hot. They went to 4.813% for it to be agreed, but there was certainly enough demand for 30-year. That's the long-term or longer-term US in Treasury bonds. And still quite a strong demand. So like we saw the day before for the 10-year, where it came in, again, it had to go much higher than many, 4.435 for the 10-year note on Wednesday. It was still had quite strong demand. That with the the good strength in the jobs market and the CPI data yesterday. CPI on yesterday. The jobs was yesterday as well. Has sort of added to the the positive spin coming out of the Treasury in Washington. So the 30-year Treasury auction yesterday was, well taken up, although it did have to go. Did have to go a bit higher than many were expecting. 4.81. It went over 4.8. Many thought it would settle at 4.8, but obviously significantly higher than last time before all this. The confirmation of what was happening with the budget and the potential confirmation of what's happening with the US budget, and the tariff situation was started to unwind. So 4.6. So the upshot of all of that is it can be cut both ways. The government can spin that there's still strong demand, but the real upshot is that Besant, the head of the Treasury, was talked about focusing on the 10-year yield number, and it's now it's back touching 4.5. It was touching 4.5 earlier, so it's significantly higher than it was this time last week when we were down at 3.39 and stuff under that key 4 level. So this sentiment number that we've just seen, as far as the key consumer in the US, remember the consumer accounts for 66% of the US economy, especially the internally buying US, which is what the tariff argument has always, as part of the tariff argument, has been about. Bringing manufacturing, bringing even services things back to the US, so that it's designed, made in the US and bought by US consumers. So that should ultimately bring costs down eventually. But the whole mechanics of doing that and how long that's going to take to do is still unknown. And it didn't. 2 or 3 times the big US governments have tried this in the past. History shows that it doesn't work. And this time, the way Trump has done it, many are arguing that he's taken on a very, very confrontational approach. A very much, I'm the man. I'm going to do the negotiating. Let's do a deal. Let's do a deal. That isn't really how traditional politics is done. See how it all finishes. But history isn't a great arbiter, or it doesn't bode well potentially for President Trump. Obviously, he's in a rush because this is his second term. He can't serve anymore. Even Trump can't change the constitution so he can serve. If indeed his polling doesn't recovers from this, because it's very much sinking very aggressively here, even in his core heartlands. There's lots of ordinary workers and businesses getting hit quite hard on this, and quite confused about what they're doing, especially some of these cuts from the federal government. Some key states and counties within states rely on federal payments quite significantly in the US. But so anyway, we'll see how it pans out. He says he's in a rush. He's in 4 years. Remember, and he's trying to get President Xi to the table, who's they're planning 25-year windows. Nobody in the West does that. Nobody's got control of the economy like the Chinese have, and it's proved very successful, creating a sort of a free middle class in China, so long as they follow the government line. But anyway, let's see. He talks about having great respect for Xi, and they don't know how to negotiate. He said yesterday. Statement saying Vance was even ruder, but he is his attack dog, isn't he? But God dear. Not quite sure the Americans know what they're dealing with, to be honest, that way around. But anyway, sentiment come in much weaker than expected. Stocks are flat, relatively flat, remain very much under pressure. A break here for any buyers, from my point of view, here on the S&P 500 would need to break 4575 for any more big investments. Some people have obviously bought down here and may prove successful come the end of the year, but there's lots of uncertainty still, and volatility is still massively high. And I've been sitting on my powder most of the this week, to be honest. But say stocks starting to move down again on the day. Nasdaq also sort of down again on the day. Yeah, sort of it's not doing much, is it, here from yesterday's close? It's sort of just drifting sideways at the moment on that data. Across the water, there's a difference in performance in the stock markets in Europe. The DAX is at 20,300, and again yesterday was a big down day, and we're down for the day today, but we seem to have found a bit of a floor around about the 20,400 earlier, but we're sort of drifted below that now, so 20,300 at the moment. The big line in the sand is 20,000 itself this week for DAX traders, but again, that here on this daily time frame, we remained very much to the downside, and the 20-day moving average now coming down to the 21,500 level. And very bearish also, but very volatile. As the sell-off's been, as we've been said for a while now, been very, very steep and significant, and it always is. When the sell-off comes, it can be really aggressive and catch lots of people out. The Nikkei overnight, overnight into Europe, the close for on Friday this morning in European times was down another 4% yesterday. So we were down yesterday, Friday. So Friday's obviously closed. This is the derivative market, but the actual cash key Asian market, the Nikkei 225 in Japan, lower again today by about 3%, I think it was, when it went closed earlier today. Across the English channel from Germany, the FTSE was doing relatively well earlier on today. And we were up earlier, but we're now down again. So it actually is replicating the movement of the DAX and the US market. So we're sort of spinning around yesterday's close, but below it basically. So as we saw here on the daily time frame, the 4-hour time frame, from the spikes on Thursday. Earlier on Thursday, we were down here. Look at the daily time frame, down again today overall, but not as bad as we were yesterday at the moment, as we close out a very, very volatile and somewhat historical week. And talking about historical terms, we look at the metals market. Gold this morning went over 3,200. We've hit an new all-time high this morning. In fact, we've gone probably higher in the last 15 minutes by looks of things on that sentiment date. Indeed we have. So a new all-time high today has taken us to 23.44 by the looks of things. Yeah, 23 more or less, 23.44 here on the following the that week sentiment data from the University of Michigan. So 22.44, a new all-time high for let's just round that up, 23, make it a round number. For gold bug, so big week for gold as well. 22.44, 3,244. We were through 3,200 this morning, and there we are. In fact, was it yesterday? Yeah, it was this morning. Overnight Asian trades through 3,200. Interestingly, I got a buy on it. I didn't actually put it on the Discord group last night. One of my systems took a gold long last night at 29, around about 2,900, no, 3,100 it was. Or was it? No, sorry, I'm talking about, it was just shy of 3,200 last night. But anyway, I didn't share that with you at the time, so it's not on the record. But yeah, gold remains a safe haven of choice in all this uncertainty that's going on as far as the economics are concerned, but also, as I've said before, as we were long this big rally here from whenever we got in a while ago to 2000, was it I can't remember now, 2004 it was, wasn't it? $2004. There's some significant central bank buying, countries are buying, the shift of away out of US treasuries, because the treasury market is falling significantly, which is why the yield is rising, which is somewhat unusual given the worries. Normally US treasuries are in demand. It's not, they're selling. So hedge funds are clearly offloading. The Chinese are clearly offloading US treasuries. So it's all added to the bid on things like gold, and also the Swiss franc. Swiss francs had a stunning week. We look at dollar against the Swiss franc, 81.15. We had these levels here yesterday. These were 20. These were 10-year lows. Those of you around 10 years ago trading, remember the Swiss surprised the markets The quiet, sensible Swiss surprised the markets with a removal of the peg to the euro in January 2025, and we had a massive crash in the euro on that. And this is the levels that the euro dollar was down. Sorry, the Swiss dollar Swiss franc was down to then, and we've got even lower. We've gone to like 2011 lows. So at the moment at 81. 81.16. So massive demand for the safe haven of the Swiss franc. Weakness of the dollar, demand for the Swiss franc continues to push this pair even lower. Big breakout of this channel we were in. I don't know, we got stopped out of a short, didn't we? Stayed in that big short, but some huge days, massive day yesterday to the downside for the dollar Swiss pair. If we just come and have a look at how the rest of our positions are doing here, I'll wrap this up in the next 5 minutes. If there's any questions about anything, we'll have a look at next week as well. Chat, any questions from it? There isn't. So as I say, we are short dollar yen, we're long euro, and the Kiwi. So let's go back to the majors. So CAD. We pulled our entry from Thursday night, Wednesday night, I should say. We pulled our stop loss down to here now. Actually, it's returned, and it looks like it might have taken us out now. We got a bit too close to, yeah. Or have we taken it out? It's come back. Is that where we were? Can't remember. It's 4 hours, wasn't it? We pulled it down. There, so that's our stop loss now. We haven't quite come back to it, but it looks like we might be getting stopped out on that at 39.10 it was, wasn't it? Yeah, 39.10 from an entry. So our second position, I'll update the notes in a minute. Euro's less aggressive with moving the stop loss up. So Euro's currently sort of rolling over it similarly, but our stop loss was pulled up on that. I haven't actually marked it on here. But it was I think I'd got it at this. I don't know where I'd pulled it up to. I'll have to check my other trading platform. But again, this was a long position from Wednesday. Here on the 9th, we got long here, and obviously we're up here somewhere. And I think I might have just pulled. I can't remember if I had the stop loss just above 112 or just under 112 last time. But we'll have a look. I don't think I've updated the. Haven't. So the original stop loss was that's our entry, wasn't it? Once, yeah, I think I pulled it up to entry. I don't know if I moved it since then. Our first target was 50 pips, or sorry, 40 pips to 140, and then we're obviously pulled it up from since then. Kiwi similar move, but I'll check the whole market. I say this is 140.20 on the CAD, but I'd moved it. I moved it at the beginning. I'd moved it since here last night. I hadn't actually updated this morning. I haven't been around, but the CAD is looks like that's been closed out at 40.10. So still a nice winning. Pips haven't been down for. I think we're still down for the week, but I'll update it all obviously tomorrow. Yeah, so we got in at 40.88, and we got being taken out at 40.10. So that's 78 pips on that total move. The second part of the move on dollar CAD. So there we go. So next week, if we just look at, so I'll do it on Forex Factory if you don't mind, because next week there we are. Is middle of the month. It's obviously it's Christian, Western Christian Easter. I think it's Orthodox Christian Easter as well. So it's Good Friday on Friday. Many markets are closed, and also Monday in markets are closed in places like the UK, Europe, Australia, New Zealand are all closed on Monday as well. So the week starts quite relatively quietly. I've got a training video webinar on Monday. It's about I think it's about Heiken Ashi candles, training with Heiken Ashi candles. on a Monday. But there's a couple of speakers, Barkin and Waller. Harker's probably the most important of that lot. Speaking on Monday. Jobs numbers for the UK on Tuesday. We got Canadian CPI also on Tuesday. Empire State data, manufacturing very much in focus, very much attention of obviously the president, although, as I say, it's around about 12% of US GDP, but manufacturing still a big sentimental handle for the existing president, current president. Chinese GDP, that'll be interesting. Overnight Wednesday. UK inflation also Wednesday. Retail sales out of the US on Wednesday. We've also got Bank of Canada with no change in rates expected. Remember, we've got an election in Canada on April the 28th. Carney's looks like he's going to be hanging on to the prime ministership. Didn't look like that a few months ago, did it, with Mr. Trudeau and everything that was going on? But thanks to Mr. Trump, many are saying, and Carney's reaction to it. So Mark Carney likely to hang on as prime minister for the Liberals in Canada, but still, obviously, 2 weeks is a long time in politics. So 28th of April, still plenty of things can happen before then. So Canadian dollar in focus Wednesday and the run up to Wednesday. Powell has a speech on Wednesday. What he can say, I don't know. He will probably trot out the same. Inflation's higher, growth is likely to be impacted. I'm sure where he's speaking, to be honest, on. Did speak about the Economic Club of Chicago. So he's actually in Chicago, which is a key center of the futures market and the options market. Yeah, watch that on. That'll be interesting on Wednesday ahead of the Easter break. Aussie jobs overnight on Thursday. Thursday also has the ECB. Again, ahead of the Easter break, expected to cut or will cut by 25 basis points. They're talking themselves in to sort of a 2% target by the end of the year. The Europeans, the euros, rallying strongly against the dollars we've just seen, and against sterling as well. So see what Miss Lagarde and the gang have got to say. Obviously, the EU, von der Leyen, she talked about a zero-based like-for-like trade exchange with the US. The US having none of it, unfortunately, for everyone, really, because it would bring costs down in Europe based on the non-tariff regulatory regime that the Europeans inflict on American companies is their line. But yeah, anyway, ECB, top of the shop for Thursday the 17th. Friday is relatively quiet, and we'll do a wrap of the week because obviously it's Good Friday and many markets are closed, and many markets are closed also on Monday. On Monday, the following Monday, the 21st, the American market's open, but the same most of Europe is closed, and Australia and New Zealand are closed. Obviously, many of the Asian markets being non-Christian will still be functioning. It's only it's Christian Easter, and it's that holiday that's being celebrated in these parts of the world. So relatively quiet week next week, given that the hands are tied for the Bank of Canada, the ECB, the policies are there, but obviously it's still potentially market moving, a bit like the minutes out the Fed this week. Confirmed what we all thought, but that it's, when you see it written down, it's confirmed and documented for history. Inflation is likely to rise. We're a bit more worried about inflation, and we're significantly more worried about growth going forward. And then the tariff impacts going on top of all that, big impact. So there we go for the week, my friends. I'll update these trade positions either tonight or over the weekend. See if anything else is what's likely to perhaps trigger tonight, Friday night. Don't be afraid about trading on Friday night. Lots of people say to me, why do you take positions on a Friday night when anything could happen over the weekend? I mean, yes, that's absolutely true, and especially now. And a couple of weeks, for a couple of Fridays I haven't. But that's it's just the nature of the way of my systems work and my approach. So I've kept my powder dry a couple of Friday nights. We'll see what's happening tonight. If I just have a quick look at, I'll just bring up my platform. If I can bring it on this, it's going to open. I'm sure it doesn't always open on this workstation. So yeah, there's not a lot going on at the moment. There's a Kiwi as a, well, it's just confirming another potential Kiwi. Yeah, the main system is looking to go long Kiwi dollar as well to 58.32. I think we were already in that one from last night, weren't we? The second system is Aussie. The only one on there is Aussie dollar, but again, there was last night on the second system. There was Euro, which we took, the DAX, which we didn't take, the Hong Kong, which we didn't take, the Kiwi CAD, which I don't think do we take the Kiwi CAD? Yes, we did. Kiwi itself, which we took, so that's added to that. There was also the UK 100, which we didn't take, and the yen, which we did take. So what's that FTSE number? It was a long on the FTSE yesterday. That's yeah, oh yeah, that would be sort of in the money, just about. A strange looking chart on Kiwi, my FTSE 100. Sorry, that was just from my interest. So yeah, so the only right, let's just recap this. So the main system has another long on Kiwi dollar. We'll see what that looks like anyway, because we're already in that. We might add to that. So Kiwi dollar might be a new trade tonight on the main system. We're already in it on the secondary system, and the secondary system, more volatile system, also has Kiwi dollar as well. So that's I'm not calling it Kiwi dollar, Aussie dollar. So Aussie dollar on the secondary system is the other one, and that's a short Aussie Kiwi from 107.58 if you took it now, but obviously the day is still to go, and we're looking for 107.29 at the moment. Just a simple 30-point move with a 50-point stop loss, 55-point stop loss around about 108.14. Entry 107.58. Take that now on the Aussie yen to the downside, obviously, but that is yet to be completely confirmed because the day isn't over yet. So stand by your bunk. So just have a look at that. Aussie New Zealand short. Aussie New Zealand short on the daily basis. There we go. So our position here is 107. Aussie New Zealand 107. 58, yeah, 107.60 ours is, so yeah, it's a few bits different to my trading platform down here. It's a few pips, no, it isn't, it's about the same now, 60, 61, 62. So that's a short on that, looking for 107.29 sort of zone. Where's 107? So 107.29 would be round about here. 107, yeah, there we go, 107.29. It's that low we saw earlier in the week. So just 30 pips on that at the moment, but you're just adding to this big trend, so you can see where that's taken. I'll actually take that now, actually. So that's probably going to get taken tonight. So short Aussie Kiwi. Anyway, I will update everything properly on the Discord group. I'll update how the week's gone. So we were certainly out of the money. 300 pips down, I think, when I last checked. We did some numbers on Wednesday, but we've got some positive numbers to add this today, and some of these might get closed out because it's Friday night again. So see what happens, see what's the Washington has got to say, see how the US markets go, and we'll decide into the close whether we keep them open or close them down and start afresh next week. So have a great weekend, everyone. Stay safe. If you're not trading with us, why not? Come and join us. It's a very simple way to get involved in trading if you're interested, whether you're a brand new trader or you got some experience. Take multiple. There's no issue about taking multiple challenges. Our most popular one is the standard two-step challenge, where you invest, so anything from $55. The $5,000 account is only $55. We have a if you're watching this video, if you put in coupon code SC25, gets you a 25% discount off that. We've got if you're brand new to us, I think Get 15, still working, Get 15 gets you a 15% discount. There we are. I don't know why you would only want a 15% discount when you get a 25% discount, but anyway, it was a 30% discount last week for the Eid holiday. But anyway, it's it's a very, very easy, quick, cheap way to get involved in the markets and give you a much gives you a leveraged account. So you're investing less than $50 to get $5,000. The most popular one that people buy is a $25,000 account for about 150. Well, 175 is the retail price, but I say SC25, there you are. Gets you it for coupon is not valid. That's because I put 1.5. It should be 2.5. Coupon is still valid. There we are. Get you a $43.75 discount to just over $130. Gets you $25,000 dollars worth of account to play with. Play being, let's don't think of it play, think of it seriously. But it gets you, the ability to take on other assets that you may not look to trade. You can, add, double the leverage. Can add, pay a bit more. So leverage can be well, it's very much a double-edged sword. So it's there because people ask for higher leverage. You just got to be very, very careful using the leverage. But the key thing is the drawdown. The key thing is your losses. The key thing is always managing your loss. So I've said this for as long as anybody's listened to me, for best part of 30 years. It's always about understanding yourself. It's all about keeping your losses small. So when you lose, and you do lose a lot of trades, you've got to keep them a very small percentage of your account. And what we do at the tradelocker.com is show you what the rules are, and you stick to the rules, and you can be very successful. And honestly, the world is your oyster. There is absolutely no cap to you moving forward in the prop trading business. And with the proptrade.com, we would love to help you and love to support you, because once you get through the challenge, whether it's a two-phase, two-step challenge, or you prefer the express challenge with tighter restrictions, not restrictions, but tighter, profit targets are higher and the daily loss is a bit tighter, but you've only got one go through. You get your funded account. These are simulated accounts. They're not it's not real money that you're using here to start off with. But when you win, it's certainly real money. The profit you share starts from 80%, goes up to 90% with some of our pro accounts, or does go up to 90% with our pro accounts. That is real cash. That's real money that you get, and that's funded on a Friday once a week. Once you prove yourself who you are, you prove you are who you say you are with your KYC documents. That protects us as well as protecting you. That's real cash. So give it a go if you haven't already. But anyway, enough of the sales pitch. That's me for the week. Let me just leave you with everyone's favorite asset, certainly for your long, is gold, 3,200. Who'd have thought I'd be saying that? $3,230 for 1 ounce of one troy ounce of gold bullion. Monster market, monster moves. Take care, everyone. I'll see you on Monday. Have a great weekend. Love to you and your family, and be good. Ciao, everyone. Bye-bye.